Good morning, traders. Ba-ba-da-ba-ba-da-ba-ba. Happy Monday morning. My name is Charles. Welcome to the Bookmap live stream. I run a community called Piratetraders. We are a community focused on the ES, the NQ, and the two-way auction process. This morning, I'm going to give you a walkthrough of how I see the market right now, what we're set up for today, and what that will likely lead to next. So what's cool about the way the market is set up this morning, it is positioned to tell us what's going on. So that doesn't necessarily mean there will instantly be a trade to take. But what it does mean is by watching what the market does this morning, we can have a very, very good idea of what's to come for the rest of the day and even the rest of the week moving forward. Now we have to put it into context. I'm going to give you levels that tell you where what is likely to happen, but you need to understand why. You need to understand the mechanisms at play in order to understand how to use this information. So just stick with me for 5 minutes. Let me take you back to the beginning, explain the whole thing so that you have that context to carry forward throughout the rest of the day. Okay, so first things first, the way that we choose to look at the market is to look at it through the lens of a two-way auction process. Okay, so if you think about an art auction, let me just get my drawing tool up here so I can draw some pretty pictures. So if you think about an auction, an art auction, the auctioneer starts the bidding at a certain price level. If somebody is willing to bid, then the auctioneer pushes the price higher. He says, "Do I have $1,000? Do I have $1,000? Do I have $1,000?" Somebody raises their hand. He goes, "Oh, do I have 2,000? 2,000? 2,000? Oh, do I have 3,000?" He pushes that market up. He pushes that price level up. The more people are willing to pay for it. As long as every time he lifts the bid higher, somebody's hand goes up in the air that wants to bid on that thing, he'll keep lifting the price higher. Okay, we call that excess. We call that momentum. Okay, that is essentially when the market is moving from one location to the next location. It will often do so in a trend. It will have momentum. It'll be like the market is moving in a certain direction. And then we have times where the market is in balance, right? If that auction were to go two ways, right? The difference between an art auction and the stock market is that in an art auction, there's only one painting. So the auction literally can only go until the highest bidder and then it stops. But in the stock market, you can just bring out another share of the stock. That's exactly the same as the last one. So, or futures contract or whatever, right? So the auction process on the stock market goes two ways. First, you auction it up as far as you can. Then you auction it down as far as you can. You find how low sellers are willing to sell. So you see how high you can push the market and buyers are still willing to buy, and how low that you can push the market and sellers are willing to sell. Sometimes the market doesn't really know how high it can go or how low it can go. It doesn't really know where price could explore. So it goes up and down, trying to figure that out. That is what we call balance. That is what we call rotation. So we look at the market on whatever time frame we're looking at it, whether we're trading, as a swing trader and we're looking at it over a period of days, or we're trading as a day trader and we're looking at it a period over hours. We're trying to understand that context. Which is happening? Are we in a moment of balance where the market is rotating within a range? Or are we in a moment of excess? Are we in a moment of momentum where the market is moving in a certain direction? Well, one of the best ways to understand whatever time frame you trade on, whether you're trying to scalp trade and you want to know what happens over the next 5 minutes, you're trying to day trade, you want to know what happens over the next 5 hours, or you want to swing trade, you want to know what happens over the next 5 days. All of those scenarios, the best way to understand whether there is balance or there is excess is to look at it from a further time period, to basically step back and then realize what's happening on that further time period and then bring it back in. Okay, so we call that the top-down approach. So this morning, to figure out what's going to come next for the ES, I'm going to actually start by zooming all the way out and looking at the monthly candles. Just to answer this question, what is happening on a monthly time frame? Okay, So on a monthly time frame, the market has excess. It has momentum. It has been going straight up nonstop for the last 1, 2, 3, 4, 5, 6, 7 months. Or sorry, weeks. I'm on the weekly here, not months. Messed that one up. Okay, monthly, 2 months. Okay. So we see that we have excess. We see that we have momentum. On the monthly time frame, there was a potential that we might have balanced, right? We had this area here. This was balance on a monthly time frame. We moved from the lower end of balance back up to the upper end of balance. So last week, there was a chance that the market could fail and pull back in on a monthly time frame and balance. It did not. It instead broke out. This is important to understand. Okay, so we're putting this in monthly context now. This is a breakout of balance on a monthly context. So what does that tell us? It tells us two things. First off, the market is likely to continue higher. If we were balancing for 1, 2, 3, 4, 5, 6 months, then we're likely to trend for longer than 1 month, right? It wouldn't make sense to go sideways for 6 months and then just push up for 1 month and then have it be done. So the first thing that it tells us is that we have excess on the monthly, we have momentum. The next thing it tells us is that we need to back test the breakout. So if this area here around 4,600 was the breakout of that monthly balance, guess what we need to do? At some point, we need to come back and back test that and look for support there if we're really going to be able to trust and move to the upper end. So that's our context. Our context is we have momentum. We're likely to keep going higher, but we must be cautious looking for a pullback to test the breakout. Okay? Well, if that's going to happen, if that's the story we're telling ourselves, what stands out about the monthly chart to us? Well, instantly, the all-time high, that previous all-time high, which we're about to kiss right now. So that previous all-time high, if I'm asking myself, what happens next when we get to that previous all-time high? I'm saying there's two scenarios. Okay. So again, monthly balance here needs a back test. Now we'll talk about balance over the last few years. We'll talk about balance between 2021 and the current market. This is also balance happening on a yearly time frame. So when the market gets up there and tests the all-time high, it is potentially breaking out of a much larger pattern, okay, which could be extremely bullish. So what we'll be looking for this month is what happens. Do we get above the overnight high? I'm sorry, the overnight. Do we get above the all-time high from back in 2022? Okay, do we get above the all-time high and then fail and pull back in? If so, we'll look to come back and test 4,600. We'll look to come back and test the breakout of the weekly momentum. If not, blue skies, baby. Very bullish. Okay? So that's understanding the market on a monthly time frame. Now let's look at it on a weekly. Well, on a weekly, we have just straight up excess, right? Just nonstop, straight up excess. Like I said, 7 weeks in a row, just plowing to the upside. That is momentum. Right now, at this moment, we still have momentum. What is the sign? Well, we are making higher lows and higher highs. As long as we continue to make higher lows and higher highs every week, the market is likely to continue its momentum. But what's the catch? Momentum doesn't last forever, right? We don't go straight up nonstop forever. At some point, we need to pull back, right? So we've got, look at all this momentum, but then we had to go sideways for a while. Look at all this momentum, but then we had to pull back with price. You can go back as far as you want in the chart. You will see over and over again, you can get momentum, but it will never last forever. At some point, you need to balance off that momentum. So on the weekly time frame, again, I'm saying to myself, if we need to balance off this momentum on the weekly time frame, where would we do it? How would it happen? What would be the thing? Again, it would be that all-time high. It would be that high from 2022. The market pokes above it, comes back down. That could lead to a lower high. if we come back to break out of that balance that we just talked about on the monthly time frame. Okay. So now we zoom into the daily. If you're feeling confused, don't worry. This is all going to come together very soon. Okay. So now we're on the daily time frame. And what do we see? Well, now we can see more balance within the excess, right? If we look at the weekly candle, it's just straight up every week, just up and up and up and up. No balance at all. It's just going straight up. But if we zoom in on the daily, we can see that it has been balancing on the way up. It's been pushing to higher prices and then spending some time going sideways. And that brings in enough momentum to push up to higher prices, spend some time going sideways, which brings in the momentum for the next move. Okay. So that tells us we're seeing excess on the monthly. We're seeing excess on the weekly. We're feeling we need balance, but maybe the market can do it just using time on a daily time frame. Maybe we can just spend a certain number of days going sideways at higher prices, and that could be enough to keep the excess going on the weekly and monthly. Okay, great. Well, if that were the case, what would we be looking for? Well, let's zoom into the market profile chart. That's what we'd be looking for. So Friday's range gave us a humongous clue as to what was coming next. Friday's range told us what to look out for this week to have an idea. Is the market going to keep going? Are we going to keep getting excess to the upside? Or do we need to pull back and balance it off? What did Friday's range do? It just balanced inside the previous day's range. Okay? That's a very, very important signal if you look at the market as an auction process. If we are assuming that as long as more hands keep going up in the air, the further that the price goes up, that it's going to keep going, an inside day is the first clue that we're running out of participants, right? In an art auction, you got at the beginning, you got tons of paddles going up. Do I have 1,000? Do I have 2,000? Do I have 3,000? There's 5 paddles, 10 paddles going up in the beginning, right? But then the higher the price goes, right? The higher the price goes, the fewer and fewer paddles go up in the air. So maybe, you go to the next price, 3,000, and you have 5 paddles, and you go to the next price, 4,000, and you have, 3 paddles, and then you go to the next price, 5,000, 6,000, 7,000, you're down, 2 paddles at the end. Just one person, I'll pay 5,000. I have 5,000, do I have 6? One person, I'll pay 6. 6, do I have 7, right? That is the volume tapering off. That is fewer and fewer people willing to bid. Well, what else is the auctioneer who's controlling that auction going to do? In the beginning, when he's auctioning, he's going to be going very fast. I have 1,000. Do I have 2,000? 2,000. Do I have 3? Do I have 3? Do I have 4? Do I have 4? Do I have 5? Do I have 5? Do I have 5? 6? I got 6,000 over here from the gentleman in the red hat. Do I have 7? He's going to be going super fast in the beginning because he just wants to keep pushing that price up very, very quickly. But when he gets to the end of the auction and he's running out of paddles going up in the air, what is he going to do? He's going to slow that auction down, right? He's going to try to give other people a chance to convince themselves, I should buy this piece of art. So in the beginning, he may not be like, I have 1,000, do I have 2,000, do I have 2,000, do I have 3? By the time he gets to the end, he's like, I have 6,000. Do I have 7? 7, anyone? 7? I don't know why this person is Southern. I have 7. Do I have 7,000? Sold to the lady for 6,000. Okay. So at the end, he slows that auction down because the volume tapered off. He needs to slow the momentum down to give, people a chance to decide if they really want to make this bid. So that is what we witnessed last week in the market. So we saw that as the market moved up to this new level up here, we'll just call it around the 4770s, okay? When it got up to this level, what did it do? It tapered off in volume. Okay, so first in the overnight after the FOMC meeting, tapered off in volume, fewer and fewer hands going up in the air. On Friday, in Friday's trade, which was basically just a balanced day, a day for the market to go sideways, what did the market do? It ran out of steam right there. Same area, ran out of bidders. Okay. So then what did it do the following night on Thursday night? Same thing, ran out of bidders there again. So what did the stock market decide to do on Friday as a result of this? It had pushed the bid up as far as it could push it up, and it had run out of hands going up in the air. So what did it do? It slowed things down. It became the auctioneer and it slowed everything down and just spent an entire day inside the previous day's range so that the market participants would have plenty of time to think about, do I want to get long? Do I want to get short? To try to convince them to get long or get short. As a result, the market went nowhere. It didn't go up or down. It literally stayed inside the previous day's range. Measurements that we use to recognize when the value of the market changes is what we call the value area, which is this blue box that you see right here. So that's Thursday's value area. And then there's Friday's value area. That's considered a way to measure the fair price to do business. Another way is the point of control, the time point of control, which you can see they're almost perfectly aligned with each other. Okay. And volume point of control. You can see they're almost perfectly aligned with each other. So all of those things tell us what was happening on Friday. We know what was going on Friday in the market. We might not know what comes next. We don't know if this market is going to fail and pull lower or if it's going to keep the momentum going and go higher, but we know what it did on Friday, which was it spent a day balancing. And we know what's going to happen next based on that. So because yesterday was an inside day, it was a balancing day, it means it's going to lead to one of three scenarios today. Either excess to the upside, more balance with time, or balance with price. That's right, folks. I said it. It's either going to go up, or it's going to go down, or it's going to go sideways. There you go. You're welcome. Enjoy. Life is good, baby. No, I'm just kidding, but I am serious. The reason that that's so important is that whether it's going to go up, down, or sideways, first off, it's likely to continue doing it for many, many days to come. If we still have momentum and the market is going to continue higher today, it will probably continue higher all week. If the market needs to balance with time, it will probably need to balance all week. If the market needs to pull back with price, it will probably need to pull back for the week. So whatever happens today will give us a humongous insight as to what comes next, whether it's up, down, or sideways. And we have exact levels to watch. Yesterday's range being inside the previous day's range gave us really specific levels to watch. So what are we watching? Yesterday's high and yesterday's low. That is Friday's high and Friday's low on the ES. The high being around 47, looks like 79. Let me just zoom in a hair. Yeah, 47.79. And Friday's low being 47.57. Those are your deal or no deal levels. Okay? For the market to be bullish, for it to have excess, for it to continue, the first thing it must do is get above yesterday's high and stay above it. We're dancing on it right now, but we still got 10 minutes to the open, so we don't know. But that's the first mission of the market. So if the market can't get above yesterday's high today, if it can't get above Friday's high, already you know the excess to the upside is over. It's not going to keep going up. It's run out of steam and it needs to balance off that excess somehow. Okay? It might balance with time and it might balance with price. You don't know. But if it can't get above yesterday's high, it's not going higher. Okay? Now, if it can get above yesterday's high, then that's a level where the market can tell you what comes next. If we get above yesterday's high, if we get above 79 and we bring in new buyers up there, we bring in support, that significantly increases the odds that we're heading to test what is now the all-time highs at 47.92. Okay? If we can get above there and find support, it is just blue skies, baby. You should be as bullish as they come because that is continued excess on the daily. It's continued excess on the weekly. It's continued excess on the monthly. Baby, this market is full steam ahead and you don't want to step in front of that freight train. Okay? But if it fails, if it's able to get above yesterday's high, push above Thursday's high, and then it fails and pulls back in, well, then you know balance. You know you're heading back down for these weak lows. So that's a very important thing to see happen. Do we test yesterday's high? If we do we find support? If we find support, do we get to Thursday's high? If we do we find support? If so, continuation. If not, failure. Okay? Now, let's say we can't get above yesterday's high. Let's say we stay stuck inside yesterday's range. Obviously, right now we're above it, but let's say in the next 10 minutes or so, it floats back down here. We're inside yesterday's range and we're just going sideways. Anything inside yesterday's range should be assumed that we're just going to get more chop inside Thursday's range. So since the market came here on Thursday, or we'll call it Wednesday night, it's been stuck inside of here. Okay? Stuck, right? So if we can't get above Thursday's high, the assumption is we're just still stuck. Friday's high. We're just still stuck. We're going sideways. This is balanced with time. And what we'll likely do is just keep going up and down in this range as long as we need to before we can push higher. Remember, this is what the market's been doing on the daily. It has been pushing to a new level and then balancing with time, going sideways. Look at this one. This started with an inside day, right? That's exactly what just happened on Friday. Same thing. So that could lead to sideways balance like that. Anything where the market is inside Friday's range is that balance. That's what we're assuming, is we're just going sideways with time. Now, if we get to Friday's low, 47.59, and we get new selling down there, well, that changes everything. That tells us the market might need a pullback with price. So then we become very, very bearish, right? We haven't had a pullback with price yet in this market, but we can. And if it happens, it could be a big one, right? So yesterday's low, Friday's low, is sort of that deal or no deal level. So Friday's high is the deal or no deal level if it's going to keep going higher. And Friday's low is the deal or no deal that it'll start going lower. And a look above and fail or a look below and fail increases the odds of more sideways. So that's it. The market is making it super easy on us today. Inside, trade it like chop, trade it like rotation. Keep coming back to those fairest prices to do business. Fairest price, fairest price, fairest price, fairest price. If it looks above and it fails, take a trade to the fairest price. If it looks below and it fails, take a trade to the fairest price. It's going to keep coming back. It's just going to go sideways. But if it's able to get above yesterday's high and find support, and then it's able to get above Thursday's high and find support, you want to be bullish for that continuation. Same thing if it finds resistance at Friday's low. Okay. So to me, a day like today is about as exciting as they come, because whilst there's nothing I'll be able to do right at the market open, there's nothing I'll be able to do right when that opening bell rings. Watching what happens today will give me insights I can use all week long, because this is a major pivot point for the market. It's either going to keep it going or it's going to fail. And so I can watch for that. Very nice. I like very much. All right, guys, give me just 1 minute here. Actually, give me about 2.5 minutes. I'm going to go make a cup of coffee so that I'm jazzed and ready when the opening bell rings. I will be right back. If you have any questions for me, put them in the comments now, and I will get to them upon my return. All right, I'm back. I have coffee now. All's right with the world. It's going to be okay, guys. We're going to survive. All right, let's jump into some questions. Nap says, good morning. Good to see you, Nap. Bust a move in the house. Shawshank is here. Debbie B, good morning to you. Ships, you're such a good teacher. Thank you, brother. Frito, good morning to you. Guten Morgen to Holger. Nor Auto Trading is here. I know what you're thinking, Nor. You're thinking what's happening with the Q. That's a great question. Let's take a look. Man, look at that. Okay, so the NQ is not the same as the ES. The NQ has more momentum. So the NQ on Friday did not have an inside day inside the previous day's range. It continued the momentum. So that is more bullish to see, and it increases the odds that momentum will continue today. The overnight did trade very similarly to the way that the ES has traded. So the last few days, we've been running out of momentum up here. Less and less volume. And that's caused us to spend more time kind of balancing down here. So it's a similar idea as the ES. The market is starting to show us signals of it rolling over, but it has not officially done so yet with the fact that it made higher highs on Friday. So bullish to see. And you should just treat it like a chop zone inside the overnight range. So below the overnight high, 16,863, or above the overnight low, 16, we'll call 800. That's a chop zone where you expect the market to just go sideways and chop around and grind. But if you can get above the overnight high, that is bullish to test Friday's high. Pushing above Friday's high and finding support, bullish for continuation. Very bullish. Pushing below the overnight low on the NQ and finding resistance looks to test the overnight low. You should basically be bullish as long as you're above Friday's low on the NQ because it's still trending. So the higher probability is that it will find support and keep going. Okay? So ES completely neutral, NQ bullish to neutral. Let's see what happens. Okay, so for the ES, we opened above the previous day's range. What does that automatically tell us? That's the first little bit bullish signal. If this momentum is going to keep going, if we spent enough time bidding around on Friday that the market is ready to keep going today, the first thing it will do is turn yesterday's high, Friday's high, into support. So the fact that we opened above it is bullish because it gives the market a chance to turn it into support. So if we can hold 47.79, I am bullish to test 47.92. If we can get above 47.92 and turn it into support, I'm bullish for continuation higher. If either of these levels fail, so if the market pushes above the high from Thursday and it doesn't find support and it pulls back in, that would be bearish for a rotation down towards 47.57. Or if we can't get up to Friday's high and we pull back down into Thursday's range, that is a look above and fail of Friday's high, which also takes us down to 47.57. Can they hold it? So of course, now that I know what I'm looking at a market with a gap up, turning into a gap and go, which is bullish to see. The next thing I'm doing is I'm looking over here at Bookmap to try to give me some context for what might happen over the next few minutes. Okay. Are we going to immediately shoot straight up to Thursday's high? Or do we need to pull back and spend a little time grinding around on Friday's high first? Well, for that, I need to look at the liquidity and I need to understand what's happening in the order books right now. Where is the liquidity and how is it changing? Okay. That'll give us a sign about what the participants are doing right this minute. So right now we have what I call a bot shenanigan zone. Both the highs and the lows of the range are being created and controlled by computers, by bots. That increases the odds of chop sideways. There is also no clear liquidity difference above or below the market. So it's not like there's tons of buyers below or tons of sellers above. It's about even. And there's nothing that really stands out to me. So that increases the odds also of chop. So I am bullish as long as we are above 47.77. But I'm assuming we're going to have to grind here for probably about 30 minutes or so before we get any big move. So the question now is, can they fill the gap? Can they get back to 79? And what happens when they do? Do they find support or not? Good morning, Jay. David G in the house. Nicholas is here. Caution. T and A Z. Good morning to you. First time watching? Well, we're happy to have you. Ask lots of questions. Knapp says the housing market index numbers come out at 10. We will look for some volatility there. Hedge fund, just hedge fund. Welcome, hedge fund. Good morning to you. Jack W., good to see you. Hi, y'all. What's up, John? So when you see this in Bookmap, this sort of bot shenanigans, where you've got icebergs, just all built up on top of themselves while the market is grinding around in a micro range, you would think about that like any other form of balance, right? Can they break out and what happens once they do? So if they're able to poke above right now, the question is, does another iceberg pop up and push it right back down? Is the game still going? Or can it get a little bit of short covering and kind of get a move? Nope, iceberg. So more games. More games, more chop. Okay, so the NQ is above the overnight high. So the same way we're looking to turn yesterday's high, Friday's high, into support on the ES, we are also looking to do the same with the overnight high on the NQ. Support at 16,860 is bullish for continuation higher. Can they hold it? All right, so I'm watching for that iceberg right now. Do we get one? Okay, so that's real buying above the overnight high. That is bullish to see. So now there are two potential levels. The ES could turn into support for continuation higher, either the halfback at 47.84 or Friday's high at 47.79. Where will the buyers be waiting? Good morning to OK and 010 number 101 McD. Welcome 010. We got 142 people hanging out. Let me refresh the page and see if we have any likes. 33 likes. 33 out of 140. Come on, people. Give me that thumbs up. Let me get a little thumb. Also, if you have any questions, if you're confused about anything, if you want to ask away. That's what I'm here for. You've only got me for another 20 minutes. Ask and you shall receive. Percy says, me like. Thank you, Percy. Fred, appreciate you. Okay, so can we turn the halfback into support? Literally right now. 47.84. If they can hold the halfback, they'll be heading up for 88. If it fails, heading back down for yesterday's high at 79. Can they hold it? Nope, no support. All right, so now we got to head down and test yesterday's high. Passing back through the opening price is a failed gap and go. So the market opened with this little gap. It tried to fill it. It didn't need to. It immediately went up to that overnight high. That was bullish to see. That was a sign it could keep going. But now it failed at the overnight high. So passing back through the opening price would mean it's heading to fill the gap. Not bearish. Really important to understand. Heading down to fill the gap is not bearish. It is just an opportunity for stronger hand buyers to step in. So we are still bullish as long as we are above 77. Just looking for that support, looking for those buyers to step in. You can chop if you want to. You can grind it all around above the overnight high and then back down. You'll grind it in and out. You can grind. You can grind. You can drive us all mad. You can grind. You can grind. The market is balancing. It's trying to break higher. It's trying to break higher. Is trying to break higher. Okay, so that was a look above and fail of the overnight high that did not fill the gap. That is less bearish to see, but I still don't trust it quite yet. I don't think they gave the strong hands a chance. So I think we need one more dip. Can anyone tell me what I'm looking at now that makes me think I should be bullish and the market should keep going higher to test those all-time highs? There's something that's been happening since the market opened that is increasing the odds in my mind that we're heading up to 92. Can anyone in the chat tell me what it is that I am seeing? The market might just be chopping around. It might just be grinding up and down. But what am I seeing that's catching my attention? Andy, VPOC migrating higher. You got it. We pushed to a new level, and now we're bringing in volume, and we're spending time. So we spent all day on Friday down here. We spent the whole weekend in here. And then this morning, the first thing we did was push up above that level. And now what are we doing? Just spending time, bringing in volume up here. That is bullish to see. It increases the odds that there are people that want to do business up here. Here's the trick to it, though. We did leave that unfilled gap. So what this kind of thing tells me is I should be bullish. I should be a buyer. I should be buying support. But that we may need that one more dip into yesterday's range before we finally get it. Anytime the market moves to a new level and it spends time and it brings in volume, that is telling you it still has momentum. It can keep going. But a lot of times the market has to break before it can rally. It just needs one more little dip to bring in those strong hands. So that's what this feels like to me. Rando says, I can see a range day. Yes. So like I said, if we can't get above 92, it'll become a range day. It'll just be a day of bounce. But right now, it's saying it's going to get above 92. As a matter of fact, it's saying not only is it going to get above 92, it's going to find new buyers up there. Why? Because right from the gap up, we found buyers. Do you really think all those buyers are going to exit the market 5 points higher? Of course not. You know what I mean? They're going to stay in that trade. That momentum is going to keep going. So you are absolutely right. If this momentum fails, the gap and go momentum that we currently have, if that fails, then yeah, just a sideways day inside the range. But if they can hold it, we're looking to test those highs. Right now, they're holding it. As a matter of fact, they can dip all the way down to yesterday's high and still be holding it. That's bullish to me. Let's see what happens. Let's see how it plays out. Shawshank says, bad taper at the highs. No, we have good taper at the highs. Perfect taper, in fact. Andy says the unfilled gap is like a window that needs to be closed. No, yes, that's a great way to think about it, right? We call it unfinished auction, right? It's like the market needs to go down there and do business. But every piece of information like that, like an unfilled gap that needs to be filled, that doesn't do it, is also information, right? So while the gap is there, and you don't know if we're going to fill it or not, you should be assuming we're going to fill that gap. That is the higher probability. But if the market starts to give you signals that you're not going to fill the gap, which is what we're getting this morning, a gap and go. The market pushes up to the overnight high and just spends time up there and just brings in new buyers and just stays up at the overnight high, then that is the opposite signal. Not only do we not need to close the window, it's a sign that we need to push higher. So again, all of this is just, we're waiting to see at this moment, can they hold the momentum or not? But if they do, if we head straight up to yesterday or to Thursday's high without filling the gap, that's even more bullish. As a gap and go. And make no mistake, you can definitely leave gaps behind. We've left a bunch over the last couple months. There's gaps all in here. Ken says, Q please. Let's do it. Let's cue it. Wow, you don't get fooled again. Wow, wow. All right. So yeah, NQ bouncing right on that overnight high. So we don't know anything until this either holds or fails. Same as we're saying with yesterday's high on the ES. So they are testing it right now for support. If they can hold it, if they can just keep bouncing and bringing in more buyers and bringing in more buyers and bringing in more buyers and bringing in more buyers, then they will head up and test Thursday's high, which I do believe, Friday's high, which I do believe is the all-time high. And then you have blue skies and it's bullish from there. But if they cannot hold this overnight high and they pull back down through the opening price, so they pull back down below 16,850, then you're looking to head down and test Friday's lows. Really, you're just seeing it as chop and there's nothing to do. So yeah, moment of truth. Can they hold it on the Q? Can they keep the momentum going? We're all just waiting with bated breath. They have the potential. Can they do it? Okay, so that's the second look above and fail. We're on the ES now. Second look above and fail of the overnight high. So same as I said before, that increases the odds. If we pass through the opening price, we haven't passed through it yet, that we will fill the gap. But that is not bearish to see. It is just a dip. Nap says Bookmap volume is low. The relative volume. Yeah, I think it's because there was like a ton of contracts in there this morning and it fucked up the volume. Somebody put a humongous order up here. And now it's just kind of, it makes it look like there's less volume relative to that, but it's not. It's normal volume. Okay, so the ticks are telling us that this look above and fail will work, increasing the odds of a gap fill. So what we'll be watching for is when we get to Friday's high, 47.79, what happens when we get there? Do those ticks turn around and head right back above the zero line? Does that liquidity step in Bookmap? What happens at the gap fill? Seven-mile reach, Q new high, but he was just testing support 5 seconds ago. Oh, you mean for today? Yeah. Yep. As long as it holds that overnight high, which it just did, then it's continuing to test Friday's high. What will happen at Friday's high gives us a clue as to what comes next. So if it pokes above Friday's high and it fails and it pulls back down, then we're likely to go sideways for a while. If it pushes above Friday's high and it brings in new buyers the way it just did, pushing above the overnight high and bringing in new buyers, well, then the momentum shall continue. And we don't fight momentum. We either join the party or we step aside. Ken says, have you noticed anything yet from the indicator that tells you the liquidity above or below? So the only time it really jumps out at me is when there's a stark difference between the two. When there is significantly more liquidity above or below, it definitely increases the odds. It will move in the direction of the more liquidity. But that difference has to be like 10,000 contracts. It has to be a massive difference. So pretty much, this little part of the indicator right here, which shows you the difference between the two, the delta between the two, unless that's in double digits, it's really not that helpful. So I'm keeping it on my chart and I'm keeping an eye on it, but I haven't found any really tradable info from it. Again, unless it's over 10,000 difference, then it should pop out at you. There's some pocket of liquidity somewhere that needs to be filled, But Screwball's got me on the VWAP, and I'm liking that. Haven't looked at VWAP in years, and it is definitely the reversion to the mean level for the market again and again. That doesn't necessarily mean it'll act as support or resistance, but just that if the market fails to go higher and it needs to pull back, it will often pull back to that VWAP. Nothing tradable. Okay, so as we are printing the B period here, we've got multiple signals that are bullish to see. First and foremost, we've begun the initial balance to the upside. That is bullish to see. We also now have the value area up against the high of the day. That is bullish to see, increasing the odds they're going to keep it going. We also just had 2 in a row look above and fails of the overnight high, neither of which filled the gap. So again, what we talk about is this concept of when what should happens doesn't happen. If the market should have filled the gap when it failed at the overnight high, but it didn't, that's a little bit bullish to see. The fact that it did it twice in a row is very bullish to see. So I am now of the opinion that the ES is heading up to test the high at 47.92, and I believe we will get some continuation from there. I don't know how far it will go. So once we get above Thursday's high from last week, we really need to hold that support to keep it going. If it looks above and it fails, then we're likely going to go sideways the rest of the day. Okay? I do not believe the market wants to go lower today anymore, because if it wanted to go lower today, it should have been able to fill that gap very, very easily. The fact that it couldn't even fill the gap, it tried 3 times. The market opened, it tried, and then it had 2 look above and fails of the overnight high, and none of them could fill the gap. That is just a sign there are not sellers right now in this market. Nobody's going short. So you've got previous shorts that are covering, and you've got new buyers that are entering, but no one's going short, not yet. So I believe even if the market looks above and fails Thursday's range, it's just going to go sideways. It's not going to have any big pullback today. So that's bullish to see. Bullish across the boards, guys. So good luck. Happy trading. Once again, I remain bullish as long as we are above yesterday's high, looking to test Thursday's high and monitor for continuation higher from there. The cool thing about being at that wasn't an all-time high. The cool thing about being in blue skies, right? Previous all-time highs, is that there's no resistance above. So you don't really have to worry about sellers. You don't have to worry about sellers coming in and smacking the market down and then it failing and losing steam. When you're in blue skies, when you're in an area of new all-time highs, it's really just momentum. All you have to worry about are the lows. And do buyers continue to step in at the momentum? So on Thursday, they stepped in. They stopped the larger pullback, which we could have gotten on Thursday and just balanced with time. Now, on Friday. Now they're continuing that momentum higher by gap and go, push above overnight high, continuation higher. So this market has momentum, folks. Just watch the momentum. When it dips, do they buy? As long as they keep buying dips, the market will continue to rip. It will shock you how far they can push it when stonks only go up. Food for thought. Bullish, bullish, bullish. We'll see you next week. Thank you very much. If you are a member of the brigade, head on over to the private stream and we will see you there. If you're not a member of the brigade, why the heck are you not a member of the brigade? It's only $10. It costs $10 a month. You can pay for that with less than one tick on the ES. I guarantee you in a month, I will say something that will get you a tick of profit on the ES or something that will save you a tick of losses. So it will certainly pay for itself. I recommend you give it a try. You can see the link at the top, Piratetraders.io. I hope to see you all in the room. Farewell and happy trading.